What's going on, guys? Can you guys see me okay?
We got you. We got you, Mr. Bobcat. That's a killer hat,
Sweet.
brother. Let's go.
Thank you, dude. Appreciate it. I like your hat as well. It's dope. I'm gonna need one of those.
So people say I keep promising, but we haven't.
We're gonna print some more.
We're gonna print. I'm waiting on my 8 a.m. hat, which is my inside joke of being out here on the West Coast and having to get up and talk to this fucking guy every morning. But, I started. So I reached out to you because you're a partner at ANAGRAM, which is I think a venture fund that a lot of founders talk about, maybe isn't broadly known, and I think that's a wonderful dynamic. But I actually reached out to you because you were tweeting a bunch about market makers, actually sort of following the fabulous Friday we had a couple of weeks back, and thought it would be cool just to check in, because I think Josh and I are idiots on this side of things. I think we've constantly wanted to, the core question we're interested in is, how do you actually go bring these assets to market in a fair and compelling way? How do you support and grow the liquidity? And obviously, I think the timeline sees market makers as a huge black hole. And then we find out that you actually write an entire blog about markets that are not obvious and maybe a little dark in a certain way. And so maybe a lot to get into here. But maybe before that, I'm very curious what you guys are focused on, so we can maybe set the scene here for your interests.
Yeah. A lot to unpack there. I would say, like, at a high level, ANAGRAM, we have a permanent capital structure. The team is composed primarily of engineers. We build companies with our own internal ideas, our own internal resources, and then we spin them out. And then we invest. Glider is a great one. They're going to be launching in the next week.
We've had Brian on.
Yeah. Brian is fantastic founder, fantastic CEO. That started as an idea internally in ANAGRAM. We built it with our engineering resources, brought on Brian, and then we spun that team out. And they've been doing phenomenal work. We built a company called Carpool, which we sold to Magic Eden relatively early on. And then there's about 2 or 3 more companies that we're kind of consistently working on at any given time.
Okay,
so that's like,
before you get into that, okay, so now I realize we're not going to have enough time with you, because this is I'm somebody who very much does not believe in the venture studio model. Feels very hard to scale. Feels like finding somebody who's going to be an incredible founder who actually can go and like invest their heartbeats in the decade to come to actually go make it big seems like the big risk there. But you guys figured something out?
We're working on it. I would liken us way more to like a Sutter Hill Ventures than I would, let's say, your typical incubator or like your typical venture studio style model. I think we do deep research on product areas that really excite us. We build POCs. We then touch the market for feedback on any ideas that we're trying to create to try to get like, a pulse of sentiment. And then I think naturally we have a lot of really good like learned insights from previous things that we built, previous founders that we backed, about like maybe where there are gaps in the industry. And we're very like problem driven, I would say, in terms of how we try to build. Like, we're not building to put something out there and then like launch a massive token. We're building to solve problems and create value in the space. And typically how that manifests itself is like we're building alongside founders that we backed to solve something for them. Good example of that is like we're building a company called Swig, which is basically like smart wallets on Solana. And that was to solve an issue for Glider. They want that same like seamless kind of like smart wallet experience that they have on Ethereum. And they want to bring that over to Solana. And I would say like once you have a really clear idea of the market, of the problem, there's maybe 5 or 6 people out there that can be a good CEO. And we spend a lot of time like courting those individuals, getting close to them, and then like having them learn through osmosis, more or less. So they'll spend 6 months with us, while potentially, learning more and more about the company before they actually take the reins and kind of graduate to that CEO level. So I kind of agree with you. I feel like there is some adverse selection there.
You guys also write just like venture checks, right?
Yes, correct.
So I think it's like you're not reliant on this product studio model for this thing to succeed. It's more of like it's beneficial to your venture checks because you get ahead of problems. You're probably more useful to founders. It's kind of more like paradigm than
right
than something else. Yeah.
Agree. Yeah.
Interesting. Okay. Nice. I already cut you off and took us down a whole other tangent here. Okay, well, maybe we can touch in on the main reason why I sort of reached out to you in the first place. Sounds like you had some experience on the market maker side. I'm curious what that was, and then my sense is that the timeline just gets it wrong consistently. So I'm wondering what the like annoying things that the timeline always gets wrong about market makers are.
Got it. I mean, like, there's so many different areas we can go. My experience was making markets on tier 2, tier 3 centralized exchanges,
Okay.
spanning about 85 different exchanges. Um, Basically, your whole universe of crypto assets started with the majors. Then we were able to derive more edge from some of the alts. And then, as I kind of mentioned in that tweet or alluded to, last cycle, and I'm not actively market making like this cycle, like we do not make markets at Anagram. Maybe it's something we get into in the future, but for now, no. Um, Last cycle, there was a lot more obfuscation around market maker activity. There was a lot less helpful, tools, right? There's people like Forged out there. There's people like Glass Markets. There's a number of data providers that give project founders better insights into like what is going on behind the scenes in terms of market maker activities. And I think that's like a great step forward. But nothing that I said in that tweet was a lie, right? Like there was a ton of edge to be scooped up just from having really good relationships with exchanges. And if you think about it, like I'll use like the Binance example. Binance kind of has like this really interesting like black box dynamic where they have like this flywheel, basically tucked inside of Binance, where it's like, hey, we have like BNB as like a core chain. We have like the launch pool. We have like this initial token offering. We have perps, and then we have like your spot, right? The reason why that's powerful is there's massive wealth generation effects historically from being a BNB holder or having assets on Binance and participating in the launch pool, right? I looked at this data maybe a year and a half ago. I haven't really checked it recently, but on average, you're going up like 1,000% more or less. If you participate in like an initial token offering at like the Binance discounted terms. What that means for exchange participants is like you're incentivized to keep your assets on Binance because you can do the next one and the next one and the next one. And it's worked in the past, so why would it stop working in the future? Then I also think there's like, in order for those launch pads to go so well, you need like aligned market makers. You need people that like understand the games afoot and like they don't miss the forest for the trees, which means like you need people to be willing to, maybe take a slight loss or, guide this token upward in order for the machine to keep going. Now that is like a very minute example. Realistically, like across the broad spectrum of centralized exchange market making, every exchange is a little bit different. To market makers' defense, I think like there's less than 5 fantastic on-chain market makers that exist today. And Ken Griffin famously said, like, a market's not evolved until there's at least 5 fantastic liquidity providers. So I think like is a lot of room for growth in on-chain market making. In terms of centralized exchanges, the big players are all in, but they're not making markets on like these alts, right? Like it just does not move the needle for them. So what you're left with is kind of like the guys that will make markets on your alts are gonna be asking for better terms because there's less liquidity and they need to make that money somehow. As well as I think like we're negating the fact that like many of these assets are incredibly volatile and there might not be any intrinsic demand for them. So like I don't know many participants in the market today that are willing to blindly bid new issuance or like new token offerings. So if you want a buyer of that token or you want someone to provide some liquidity to that token, like naturally you're probably going to have to give up terms. Now, as the market gets more competitive, I think the take rate there or the ability to charge there for market makers diminishes. But we haven't, I don't think we've seen that dynamic like play out that strongly yet.
I'm
I think
curious what
that's
your take
something.
is on the whole, Jesse going after Binance and Aerodrome and sort of like the, DEX coming into Coinbase. Is that a meaningful thing or is it overblown?
God, I mean, I think it's meaningful. Like I think Coinbase did everything by the book, and that was actually their greatest fault. Obviously, no one can predict the future, but the way that these like Asian tigers is what I like to call them. It's like a kind of a callback to like in export subsidized industrialization back in back in the day. But like the tier 2, tier 3 exchanges like still make up a massive chunk of the volume in Asia. And then you have Binance, which is just like the largest exchange by far. And if you're a market maker, like you are incentivized to trade on Binance if you have a massive book, and all of the best market makers have massive books, therefore they're going to trade on Binance. And again, I think like if I go back to what we were good at, we were good at a lot of things. We were good at like forward exchange because we have 80 to 85 different exchanges, and you have to figure out ways to get like the base currency into that exchange. We were good at quoting tight or having tight spreads on less liquid exchanges or less liquid pairs because that's what we optimized for. And we were good at like handling volatility more or less. And when I think about that skill set, like there are a lot of teams that are very good at that, but there are a lot of teams that can make a lot more money in more straightforward and much easier ways that don't require like an arduous tech build or like handling vol or taking drawdowns, which is something we were comfortable with because we were a little bit more risk on, and like that was our edge. Like we were filling that gap in the market at that time.
What's your take on what happened with Limitless earlier this week? Like, did that look like an on-chain market making strategy to you or something else?
I mean, I like briefly looked at the like some of the Limitless stuff. I actually think like I think he went about it like in like a terrible way, in terms of perception, in terms of the tweet, in terms of all of that. I think the strategy or what he was trying to accomplish might have actually been like slightly beneficial. I haven't like done enough work to tell you if like black and white, like, hey, this is great, but I know the delivery just wasn't,
Yeah,
that could have
was
been
our
handled
conversation
better.
too. It's just like, yeah, can't really comment on the details there because I don't really know it, and it's out of my pay grade. But definitely the communication around it was less than ideal.
Yeah,
It's
but this
fascinating.
is why we're here. Like I want to see more people try to do like new things, new market making shops emerge, new mechanisms in order to do this in a more passive, transparent way. I think transparency is like the main thing.
Yeah, and I think that's the interesting thing about the say Aerodrome or DEXs coming in to Coinbase is there are a bunch of obviously associated dynamics that need to get solved for this to really be a big deal. I think one of those is like we need compelling tokens that people want to actually hold, that have some value to them. And then there needs to be the economic model behind it to actually bring the liquidity to it. And those things seem probably tightly paired unless you're just willing to go and have to dump a ton of money and to incentivize to somebody to come in and start participating, which is, I mean, literally the history of crypto. So I think that's fascinating. See, I knew we were going to run out of time, my man. I knew we were going to run out of time. So like, I feel like we're going to try to bring you back on, and maybe I will do better to be more focused because I feel like there's 7 other directions I want to get into. But I do want to call out your blog because it is a rabbit hole that I've already dug or started to want to dive into here. It's darkmarket.io. Ghost in the Machine, Rivers of Gold, Cost of Contraband, and Somali Pirate Stock Exchange. I've had a few of these come across my radar before, but the last 2 I haven't. So I recommend people go give that a read. You're a fantastic writer and researcher. And yeah, hopefully you'll come back on and we can maybe schedule a bit more time to go deeper with you.
Yeah, down to jam whenever. Thanks so much for having me on, and I love what you guys are doing. I think it's awesome.
Appreciate it, man. We'll chat soon.
Sweet. Take care, guys.